Hello everybody, Randy Patrick here. Time for Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Let's just say it's declining ever so slowly, but it's making its way down there. That's the scoop for today. It's losing steam. People, I can tell the market's losing steam. Randy Patrick here, that's my name. Today's the 25th of June. It's a Tuesday. We got some stuff to talk about today, interesting topics. It's going to revolve around new home sales sinking, S&P CoreLogic Case-Shiller home price index was released today, Manhattan sales drop, and also the fact that investors are beating out first-time home buyers when buying property. Simple as that. But before we start, I just want to say, if you're not already a subscriber, please click the little button there and subscribe to my channel. It helps us grow. It helps keeping me motivated to do these videos and do the best I can for everybody out there. So I appreciate that. And I also believe that I've reached out to pretty much everybody who's been in contact with me over the past couple of days. We've emailed, we've spoken. If I haven't gotten to you, you might want to just resend an email to me, but I'll make sure I hit that later on tonight and connect. So again, if I can help you with finding a home, with giving you some advice and connecting the dots on real estate purchases in your local area, or real estate investment training, showing you guys how to find and purchase and leverage distressed property, drop me a line. I'm happy to help. All right, so here we go. Here is the news of the week for today. Remember, folks, never pay retail. That's the motto, right? Never pay retail. So actually, the first thing we're talking about is actually going to the new home sales. So new home sales crashed in May. It's the weakest for since 2018. So again, it's been up and down, but it's crashed this May. When we mean crash, basically was the volume of shares. So after existing home sales rebounded modestly, I guess the month before, you would think the mortgage rates being lower would actually help things out, but it was a shocking 7.8% crash month over month. So really, that's against an expectation of 1.6 month over month increase. So really, it bounced expectations. The issue clearly is affordability, and we go back down to the whole concept of but rates are lower. So it seems that everybody, when there's poor sales results or poor value increases, etc., out in the real estate world, it's that tagline, but rates are lower. So in spite of lower rates and more attractive financing options, people still are not purchasing homes where I guess builders and other people would like them to be. So that's a scoop. So really boils down to affordability. We've sort of proven the fact that it's not rate dependent. Rate is still important, but really it's affordability and personal economics that are holding back new home sales. Again, that was they plunged 7.8% in May, weakest since December 2018, and median prices of homes have tumbled to $308,000. I know it was higher early in the year, around $335K, but it's down to $308K now, and that's a 2.7% annual decrease from May of last year. So basically, we've lost 2.7% in home value for new homes, sales price wise, year over year, which is certainly better for home buyers for sure. Purchases of new homes fell in the Northeast and the West, where they dropped the most since 2010. So the West obviously getting hit the hardest. Sales did rise in the South and the Midwest. Now, again, back into the comments, lower rates have not unleashed a new wave of demand. That was the whole point. A lot of analysts and economists were sort of saying, hey, with these lower rates, we expect to see an uptick in activity in the new home sales. That did not happen. They're stating that it's harder for builders to compete now. Why is that? Because there's more existing homes in the marketplace. So obviously, since the beginning of the new year, we've seen a steady increase of existing home sales, hitting the market, and inventory is rising. It's still not where we'd like it to be, clearly, but obviously, having more choice, that's going to affect new home sales. And typically, new home sales are going to be a little more expensive than existing home sales, just for that reason, because they're brand new. They don't, they're not. There's no deferred maintenance. There's no age issues. It's a brand new house that's going to be a bit more. So basically, that's the scoop. Supply of new homes is up to 6.4 months worth of supply. That's if you want to, versus 4.3 months of supply for existing homes. So we got basically 2 more months of supply out there on the new home construction stuff. So something to think about if you're looking for a home. Maybe you can cut yourself a good good deal. All right, moving on to Case-Shiller results released today. So data was released for April 2019, shows that the annual home price gains continue to fall according to S&P CoreLogic Case-Shiller National Home Price Index. That's the long form description of what this really is. So essentially, there was a 3.5% annual gain in April across the board for the entire index. So that's nationally 3.5%. Year-over-year values are up 3.5%. That's down from 3.7% the previous month in March. And remember, Case-Shiller is usually a couple months back, with respect to they're tagging along with their analysis. So please keep that in mind. So again, slowly but surely, we're seeing the annual appreciations drop every month. It's sort of working its way down. All right. Funny enough, Las Vegas, Phoenix, and Tampa reported the highest year-over-year gains among the 20 cities. There's a national index, a 10-city composite index, and a 20-city, which people tend to focus on. So out of the 20 cities index, Las Vegas, Phoenix, and Tampa were the highest. Las Vegas led the way with a 7.1% year-over-year price increase, followed by Phoenix with 6% increase, and Tampa with a 5.6% increase. Now, funny enough, I would look at these three locations, so Las Vegas, Phoenix, and Tampa, as probably having a little higher investor concentration than the rest of the cities that are out there. So just sort of keep that in mind. I'm pretty sure that there's more investor activity and probably pushing prices up because of that in those markets. I certainly know that Tampa has that, and for what I remember and understand about Vegas and Phoenix, they're higher investor concentrations too. And a lot of the iBuyers, they actually do a lot of business in Phoenix, and a lot of them test market their apps and their software and their platforms in the Phoenix area as well too. So keep that in mind. So if we go a little farther here, if I look at the the national index, it looks like we're 12.6% from the 2006 peak. So the index follows the first housing bubble, the crash, and where we are right now. So you've got 2006 was the last peak, and we're 12.6% above the last peak, which it's been 11 and high, and change 11.7 or 11.8 last time through. So we've actually gone up, almost a point on the last peak as well too. So funny enough, even though we're still showing month over month decreases, the trends down, it's still, that's where it's going. We're still getting these value peaks that are popping up a little bit here. It's interesting. If you want to talk about value, most of this is actually, again, it's fairly straightforward. Atlanta, and these again are all year-over-year percent changes. Atlanta 4.9%, Boston 3.9%, Charlotte 4.2%, Chicago 1.9%, Cleveland 3.5%, Dallas 2.7%, Denver 3.8%, Detroit 3.5%, Vegas, of course, we mentioned 7.1%, Los Angeles at 1.5%. So we're going to see the West Coast is slowing down faster. Miami at 3.9% increase, Minneapolis 3% increase, New York 2.1% increase. Again, Phoenix at 6%, Portland at 2.6%, San Diego at 0.8% increase, San Francisco at 1.8% increase, and Seattle actually clocked in at no increase, so 0.0 year-over-year increase, which trends, it's now at that point. Now it's huge. It's come down every month, and now it's at a month where it did not increase or decrease, so it's right there, the tipping point. I expect we're going to see that drop below. Maybe we'll have our first negative on Case-Shiller on the 20-city composite next month. Tampa obviously said 5.6% increase, Washington 2.6% increase. So going through this quickly, what do we see? We see basically the West Coast. So you've got essentially Seattle, San Diego, Los Angeles, Phoenix, San Francisco, and Portland are all, they're slowing down. Everybody else, in the 2s and 3s, maybe low 4s. These guys are sub 2, sub 1, 0. So we certainly are seeing West Coast showing the decline trends first, and that's typically what happens. The West Coast shows it. Previous housing crisis, the West Coast showed the trend first, and then you'd have like a New York area showing a trend, and then you'd have Miami showing a trend, and then everything sort of falls from there. So again, this is not unlike what happened last time through. So there we go, everybody. So again, interesting with the Case-Shiller. Now, just to sort of add a little credence to that, Zillow has also they also track. So I guess Case-Shiller has their own calculation. Redfin has their own calculations. They post. Zillow does their own analysis as well too. So just to sort of tag up with the Case-Shiller, it said here, prices tracked by Zillow have fallen month to month for 2 straight months on a seasonally adjusted basis. These are the first monthly drops in 7 years. So Zillow is showing, across the board, 2 drops month, for the past couple months, and that's the first time in 7 years. Whereas I know we can look at Case-Shiller here, and one of the things about Case-Shiller is that we're seeing, we're talking that this is going on for how many months now? Like, if we take a look at the drop here, it's like the 13th straight month or something to that effect with respect to month over month decreases. So just sort of keep that in mind. All right. So let's go on to talking about decreases. Manhattan. So we hear a lot of things going on in the New York City area with condo prices and things like that. So basically, it's Manhattan home prices have been falling. So essentially, it's the analysts are saying that it started with the new tax law. So when the state and local tax law changes were implemented, they felt that this started the falling of values here, or at least accelerated them. Manhattan home prices are 5% down from where they were before. This is the 6th straight quarter of declines, and again, it's sort of been happening. They felt that when SALT was, or the new state and local tax laws, or lack of deductions available to you on your mortgage and your mortgage interest and your property taxes, when that was implemented, that sort of pushed people over the edge. So they say from 2017 to 2018, about 64,000 people left the New York City area. They relocated, well, largely due to the state and local tax increases or the lack of, again, benefits for them. And of course, the number one. Actually, sorry, let me restate that. That's New York going to Florida. That's not just leaving New York. So more people have left New York than 64,000 people. But guess what? 64,000 New Yorkers relocated to Florida, due to that situation right now. And we've seen a lot of that going on. A lot of people moving to the east coast of Florida, that I-95 corridor. Typically, you've got the West Palm, Boca, Lauderdale, Miami kind of corridor area there. So that's sort of what's happening. And again, they estimate, they estimate this is worth like $14 billion worth of, whatever the tax value is, or whatever that's being relocated away, just because there's so many people going. And when you're into caps on your interest and your property taxes in definitely higher price locations, that's going to hurt on both sides. People are going to feel it, and they're going to want to not have to absorb that and go someplace else where they can get better quality of life, cheaper property, cheaper labor pool, no snow, no winter, etc. So again, I think people are looking at what's best for them, economic wise, and more people are willing to relocate and move. So I think that's very interesting. And again, I guess you could say this is the first time Manhattan home prices have fallen since the last financial crisis. So back when we had the last big issues, with the housing crisis, financial crisis, the first time they've fallen since then. So very, very interesting. And to cap that off, we go into our investors pricing out first-time home buyers. And there's a couple articles that are being sort of scooted around now, and I saw this on CNBC, a little interview with the lady who wrote an article in the Wall Street Journal. And really, her position is the rental market is strong, and the reason is it's hard to compete and hard to buy a house these days with the affordability issues, with personal income, wages, whatever is going on here. It's harder and harder to buy a home, and therefore more people are focusing on the rental marketplace. So obviously the rental market is strong. Tech, we'll call it websites, tech applications, whatever. It's making it easier for people to buy property anywhere, in the world and across the U.S. So she was stating the fact that you've got lots of foreign buyers who can view websites and can view apps and actually can do all their analysis and research via the internet and make local contacts and pull the trigger on home purchases and things like that. So again, they're seeing a lot of people doing that. Like cash buyers are not from the area. Her examples were overseas, or if you live in California and you sell your property, you've done well in your property. You're buying, you can buy how many properties in Tennessee, for example. That's what they were used, in sort of middle America, once you cash out your higher price West Coast homes. So we're certainly seeing a shift in that. So the point though is that cash buyers are beating out first-time home buyers. That's the key. And a lot of the cash buyers are looking for actually some new home construction. So they're, investors are buying 1 in 5 single-family, starter homes. So that's taking away, as 20% of the market is being removed from first-time home buyers, and investors are buying those properties. When you take a look at why that makes sense, well, again, if you're looking to purchase a home, if you can get a starter home which is reasonably priced, you've got a nice home as an investment, and you're not going to have to rehab it, new appliances, like you're not countertops, flooring, whatever that is, you've got a new home. The depreciation, it's going to be maybe 10 years before you have to do something to that home. So that's a nice investment. You can rent it out because, again, you're beating that first-time home buyer to the marketplace. So they need to get an FHA mortgage. They only can put a little bit down. So when an investor comes in, a cash investor, and they're going, okay, I'll take it off your hands, guess what? There's more incentive to get a quick closing, get the cash, as opposed to running through appraisal process, mortgage process, inspection process, checking on those boxes that are sort of, I guess you say, customary when selling home to buyers that are of course finance buyers. You have to go through all those things, but sometimes on the FHA buyer side, there's little tighter regulations or guidelines that in certain more boxes have to be checked from what I understand. So please keep that in mind. A good reason why maybe first-time home buyers are having a hard time, because investors are swooping that up. And today I was actually going to speak about that, and I totally forgot that it was the Case-Shiller index discussion today. So that's why I'll talk later on this week about some more interesting topics with respect to what's going on behind the scenes in the marketplace. But just in summary here, new home sales, plunging, they're sinking, and they're dropping more than expected. Interest rates the lower interest rates aren't driving more buyers. So we've figured out again that it's not just necessarily rates, it's pretty much an affordability issue or a personal economy issue, because people are getting tapped out, or they're just not willing to buy at these prices, and they're going to wait out to see what happens in the next few months, which I strongly believe. And Case-Shiller, still, we're seeing, West Coast dropping now. So West Coast really is starting to show, we'll call it negative appreciation. So every month the appreciation is less and less and less on an annual basis. Now we've had our first zeros, so to speak. So the first city to actually have no appreciation, and it's a city, it was Seattle, and that's had a ton of appreciation over the past little while. So I think that's our first one that'll probably, I said, fall below the line. And again, just we're going to see this in different markets of the country. So we're going to see some little price pops. Some of the analysts and the comments for the Case-Shiller was that, hey, we're probably going to see some more increases now that the summer home buying season's heating up. That will remain to be seen. We may see some month-to-month increases, but I think on an annual basis, the trend is still going lower and lower. And that's, again, Case-Shiller, is a couple months behind based on analysis. We see Zillow already showing 2 months worth of property values decreasing, or home sales decreasing values across the board. So things are changing, as we always say, not fast enough for us, but hey, what can you do? We're able to watch this in real time now, and I guess that's why it seems like it's moving at a sales pace. But each time we see that little extra drop, so it's starting to catch up now. We'll see what happens. So anyway, that's it for today. I'll hopefully have one more video by the end of the week here. And again, just want to make sure that please appreciate the likes, the comments, share my video if you can. If you're not a subscriber, I'd really appreciate if you could subscribe, help the channel grow, help me get higher positioning on my YouTube rankings here. And once again, if you're looking for support in purchasing property down where I live here, lots of investors play down here. If you want to talk about buying distressed property, give me a shout. If you want to learn how to do it and talk about my training, I'm happy to engage you in that as well too. And I'm always happy to connect the dots for people. People call me from different parts of the country asking questions. If I can align them with mortgage professionals or real estate agents who I know will actually service people well and effectively, I'm happy to do that as well too. So anyway, everybody, never pay retail, and we'll look forward to speaking to you later in the week. Thanks.